Hello everyone, welcome to Dmvii Live for December 2nd, 2017. Keep in mind, stocks and strategies discussed here are for information only. Do not treat any information provided here as investment advice or recommendation. It is up to the individual investor to perform due diligence prior to investing in any company. And here are the symbols covered this week.
An article that the traditional ad model is not working. They mentioned a couple of states like Vice. Advertisers aren't coming in anymore, and their ad revenue is going up. So it's like they're eating everyone's lunch. And I rarely watch TV, but I was at home on Thanksgiving. I was watching TV, and all the ads notice are pharmaceutical companies.
Oh yeah. Well, that's skewing old. See, you're branding yourself as an old viewer. So if you see all those drug ads, that means they brand you as being an old person.
Yeah. So how are they advertising to all the young people? It seems like Facebook and Instagram.
Yeah.
So I guess their indicators show that young people aren't watching much TV.
Snapchat and that kind of
Yeah,
stuff.
that kind of stuff. Okay. It seems like younger generations moving towards.
Correct, because I know some like 30-ish and it is pretty much the cord cutters or whatever. It's like, yeah, that's not where they get their information. Okay.
So I don't see any competition with Facebook at the moment because they own Instagram.
What made it go down? It took a big dive on Wednesday, Thursday, Friday.
All the
I'm not
tax.
sure.
Yeah.
I thought it was
The whole-
political stuff going on.
The whole tech sector was down. Yeah.
That's right, but that's because a lot of people think it's overvalued.
Looks like Mark Zuckerman dumped $40 million of the shares too. So I mean, there's a big supply.
So the management
People
is
thought it
selling
was
their shares.
overvalued at $30, you know.
I'm sorry?
Some people thought it was overvalued at $30 or $40. And
I don't know. They're making a lot of money. They don't have much debt, and there's no competition, so it seems like a good buy to me.
They also
Less
own
than government.
YouTube. They also own YouTube, right?
No, Google.
Google YouTube. Sorry, my bad.
But on that point, they are going to eventually look
Yeah,
to
they're making
stream.
their own content.
You're about to movie by Facebook. That's where the competition is.
They're investing in developing content, so be a competitor from Netflix.
That's
what they say.
so real quick. So this is I bring up AT&T, but AT&T buying down, and they say, well, we got a lot of competition going on. Netflix, Disney's gonna come around, HBO's around, Facebook is gonna stream stuff, and here we are, a little old AT&T with DirecTV, you know. So we're not gonna gobble up the universe and make it anti-competitive. There's a lot of competition out there in streaming. You know, Facebook is gonna probably be in the business of streaming short documentaries or movies, but I wouldn't doubt it.
I mean, it started already like small time people making their own content. Like you look through the feed, all these like mini documentaries.
Just like YouTube.
Seems like it's where everyone's getting their news.
I mean, like Way is doing for for this.
Yeah.
Doing many. I mean, that's audio, but yeah. Okay, is that it for you?
Yeah.
Sasha, you're next.
I've continued to develop this strategy of leverage indexes. So maybe I shouldn't spend too much time on that because I think this group is more for individual stocks. But it's worked. But maybe it's worked because of the bull market is going. But it's pretty simple. I basically play the UPRO. UPRO is the leverage index of the S&P 500 bull, that's long. And the bear is SPXS. And so I just basically
No dividend there.
No. This is 3 times the SPY.
three times the
You
leverage.
you go in and out of this a couple of days, 3 days at a time. You don't hold it.
Yeah, so I've been back testing it with a friend that's very good on this and so on. And maybe someday if, I could maybe put a PowerPoint and share with you what we're doing. But I don't know if it works. Maybe it works because it's a bull market. But essentially, it's the idea is that if something goes up 3 days, it's a higher chance it will go down. And so I basically it's 3-1. Keep it 3 days long and then go 1 day short. And it's always one index. I only hold one index. It wasn't clear last time. So I only hold UPRO and then I then go to SPXS.
Yeah, okay, so
It's a strategy of basically holding long for 3 days and then going 1 day short, 3 days long, 1 day short. But of course, you look at the market and you try to.
In a bull market, that's a winner.
Well, in fact, the bull market is so good, I should have never got short. If I held you for all the time.
The short is SPXX, is that it?
Yes, yeah. Short is
Put
SPXS.
that one. I mean, who knows what's right or wrong? We only want to know what you think. I mean, it doesn't
has
say you're
worked.
right or wrong.
It
It's
has
just what you
worked,
think.
and so I'm refining
So
it, and I
here's
play
the
with it.
comparison between the two.
Okay, so you
Exactly
put both up.
reciprocal,
Right,
you
that's-
see 5.5% up, 5.5% down,
Uh-huh.
exactly the same.
So,
Okay, there's a gentleman there in the back. Yes. Yeah.
Yeah, I had a question. You said short, what does that mean? So,
no, sorry, SPXS is a
Oh, SS.
SPXS.
So
XS.
short is somebody who makes money when things go down.
Right, it makes money,
get out of it or what?
Well, you sell, it's a little technical, you sell things you don't, you're betting that the market goes down, you make money if something goes down, that's what
You
the
want to
short
bring
does.
that up? Oh, you brought this
right
up.
there, it's right there.
That's
It's
SPXS.
a technical thing, but that's
Red.
basically he's betting, if this goes down, I win.
That's your sections, right?
No,
that's not
Yeah, we'll do a sidebar.
Yeah, we
The way to explain it is, you borrow a stock that you don't own, you sell it, okay? Then later on, when it goes down, you buy it back for a lower price, okay? Then you give it back to the person you borrowed it from. And all of this is done rapidly by the broker organization.
Access.
It's a complicated mode. If the whole idea is to make money when a stock goes down. And you being a new guy at it, better stay out of it.
First advice.
It's not shorting, you're buying an index that does it.
He
for
just
you.
saved you $100,000 right there.
Yeah, that's true.
So
Yeah,
question.
it's educated gambling, and sometimes the gambling is more than the education, but,
So question.
yeah.
On average, do you make money on the every third day on the shorts? Because if you don't make money from the shorts, why not just every 3 days sell it and then just don't hold any position for that, fourth day and then go every 3 days,
So let me
Because you can make
explain
money
it.
on the one way.
So, you buy UPro on Monday,
Yes.
and you watch it. If it goes up the next day, you hold it. If it
Mhm.
goes up the next day, you hold it. By Wednesday, you gamble that it's gone up 3 times.
Yeah.
I think there's a higher chance you sell it and you buy SDXS at the same moment.
Yep.
Now
So
you're short.
yeah.
Now the short and you hold it overnight. The next morning, if the market keep going up, you're now losing money. You close that position. So you're only short for 1 day, and you go long again. Because if you look historically, markets don't fall for very long, but they go. When they're short, when the markets fall, they tend to only fall on a short period of time, but they tend to go long for much longer. So basically, this 3-1 strategy, and then I also looked at Fridays and Mondays for problems, so I would kind of play it on Tuesday, Wednesday, and Thursday. So that's the idea, 3-1, 3-1.
What percent of your portfolio do you?
Well, that's irrelevant. I mean, it doesn't matter how much I invest, that's
Pennies,
irrelevant.
yeah.
Whether I have $100 or $100.
Yeah, it's just your strategy. You
Yeah,
do
and-
what you
and
want. That's
so
what we want to hear. What
when I look back, when you back tested it, hey, it would have worked. And so what I've been finding out is that historically since June, I think I was lucky, the market has been going up. I've never lost money on the bull, on the UPRO. I lost money on the short.
Yeah.
And then I said, well, if I had just kept UPRO, I would have been much better. So I'm kind of learning, strategy.
Right.
And what I've done now, for those that do options, is that when I go SPXS, to the short, I immediately protect it with an option. That way I minimize my losses, but it's an insurance, I kind of pay for it. So I've been playing with it, I have a guy that can program it all, we can back test it, we can fine tune it, so so far so good. So,
Oh.
but then I decided, okay, for the benefit of this group, I went long on GE. So I like to
Oh, okay.
John's been talking about G for a
Wait,
month.
wait, Steve. If I remember correctly, you said that one is triple leverage, one
Yes.
is double leverage.
Well,
No, they're both 3.
they're both triple. I played with doubles and I felt that it's not enough risk.
Excitement.
No, I mean, I will offer this gratuitous observation. To get more action, you need to go multiple times. Borrow. You're basically borrowing to get more action. That's that's what you're doing now. You're comfortable doing that. I mean, that's your thinking, but that's what's happened. You're
Yeah,
getting more
the
leverage
beauty
behind it.
though of the index is that we don't care about stocks, you don't have to watch stocks, you don't have to read anything, and that's what I got frustrated with playing stocks because, you just don't know, things happen. So here, the chance of the market collapsing is much less than the chance of the market going down 20% is very rare. Any stock going down 20% is much more common. So I felt much more comfortable playing the index, but then tripling it to get some more money. So that I think that it's a comfort level, and I spend much less time. I just found a lot of
That's a
in stocks.
Yeah.
But GE, I guess I figured why not try long term. So I bought it at 18.12. How's that? So I'm losing money
That's
already.
the appropriate point.
Now they're, it's the latest 2.68 yield, so that's after the cut, the dividend cut, so, it's kind of small dividend, but,
John, good buying opportunity, huh?
And anybody here thinks GE is a good long term?
well, Vince will give you an opinion, I'm sure.
Well, okay, I have it at thrift. Okay. And I never plan to sell it. And I plan, hopefully, they'll continue to pay dividend. That'll be my, my social security.
And you've been buying it for many years then?
Yes.
Yeah, I think it cannot really go much lower. I mean, it's such, unless of course the whole market
It could
collapses.
go to $5. It's been there.
I mean, basically whack your dividend, that's what you bought it for, that hurts.
I bought it after that. That was
Yeah.
bad. Yeah, but I still, still.
But it's been as low as $5.
Yeah, we got it, 2009, but everything else.
Here's what the analyst is saying about it.
Well, the analysts, I mean, I think you're looking at a reconstruction, a reinvention of this company. I think the current CEO is doing all the right moves where he has reduced the dividend and he's gonna go in and just do away with areas of the company that don't make money. Now, I don't think he's the answer. I think he's going through sort of like Tillerson, reducing the State Department. So once we get that accomplished with GE, then someone's got to come in there, sort of like the Microsoft person who took over, who's in charge of the cloud, part of Microsoft. And I think you're looking 8 years before this company is really righted its ship. So this fellow will be there, he'll right-size the company, he'll only have areas that they make profits in, they'll be smaller, they could divide it up. And then there's going to be somebody coming in that's really key, which is innovative, and they have enough money to use that money for something very positive and very strong. It's not like they're broke. I think they have $150 billion. It's not, so if you look at it that way, I think General Electric's fine, and I would pick it up if it gets to $10 or $15.
So I would protect I'm gonna buy a put option for January of protect it, 17 or something like that. I wouldn't want to risk it to the lower, but to me, the upside potential is much bigger.
You know, sell some calls to finance that, but
Well, I'll just
it's gonna
put it like this. I mean, who cares where I get the money from? I could sell some calls.
But if you think the upside is there, then don't cap it.
Sorry?
If you think the upside is there, there's no reason to cap it with
Yeah,
the call.
yeah.
Yeah, I think it's
Well,
going to
but
be like
like,
Microsoft.
having said that, the question is there a catalyst that will propel this GE from $17.88 to $20 anytime soon? If there is a catalyst in the site, you don't sell it.
Well, I'll tell you one catalyst, China decided to buy them out. I can see that happening fast.
Well,
I would rule that out.
I mean, the thing, it takes time. I mean, you can't you have a lot of people that are gonna be letting go, you have a lot of issues that are gonna close down. And it's gonna take them several years to do that. But they are also in the same business as Boeing. They do similar work that Boeing does. And you see Boeing is like a $280 stock. So there is potential with this entity that has certain positives to it that will do very well.
Got the engine and the
And
healthcare side.
but I think it will take a decade, because it just takes time. And again, I don't think this particular CEO is the guy who's gonna take them in a growth mode, but he will right-size the company, and then I think you'll have to bring somebody in there that's very, innovative, and they'll have the resources to go after things like that.
Yeah, I'm not a long-term looking, I'm looking for maybe a year at the most, if it's.
And it's gonna sit here
If it's gonna,
and
yeah.
go down even then.
Well, then that's why I'll buy the protection in January. But yeah, I don't look long term, but I think it's a great, deal with it.
So Vic, you wanna say something?
Okay, let me tell you what certain analysts are saying, okay? I got a buy, outperform, a buy, that's from Citigroup, which is a big outfit. A sell from Deutsche Bank, which is also, I got three neutrals, a sell, a neutral, Merrill Lynch says buy, underperform, neutral, underperform, then a bunch of neutrals. So when you put it all together,
It's about it.
he's right. John is right. It's
That, by the way, that's
Still a
from
buy.
Fidelity side, right? You're
well,
getting those
Fidelity
analysts.
is getting me these
Right,
recommendations by other brokers.
right, but that's what you're seeing on the Fidelity side, has those
Yeah.
recommendations.
So I agree with John. It's speculative.
Okay.
There are all these
We're back
different brokers saying different things.
Right.
More positive, right? More, I mean, if you just do the
Well-
mathematics, there's more buy than sell.
Who knows what, you only know what you think yourself. You know, there's all kinds of stuff out there. I mean, all kinds. But John, you're next.
Okay, I had a lot of IT companies taken away from me as they went down, like Square and Stamp went down. So, and I didn't do anything really exciting. I did pick up a few shares of what James mentioned, that NTNX, and it went up a bit.
Yeah.
But I guess like Wei had mentioned, and I think Hector mentioned today, that the IT sector is sort of overpopulated and people are taking profits. And I noticed the more medical areas are doing better. I just had a quick question, and this is not political, so please, if I insult anybody, it's not meant that way. But if they pass this bill, this tax break for everybody, and ideally it works that the corporations are not as burdened with their resources anymore because of it, will the market feel, okay, they've already done it and that's it? Or will the market say hip hip hooray and just go through the roof?
So there's different schools of thought that you hear the pundits talk about this. So the market has run up some.
On the belief this would take place.
And this is, and once that's right, and once they reconcile with the House, you sell on the news. That's one thing. And I'm saying, here's some analysts talking in general, going into next year, you might have a single-digit increase in equities, maybe 5% at most in 2018. You're not going to be able to make the money that you make this year. I think a lot of that is built in already on the prospect. The IWM, the Russell 2000, has been popping up from 135 to 150 recently on the prospect of this tax relief. So a lot of that is built in. They might sell news. Yeah, that's all speculation.
Because it seems like if the market does like an individual company, and I think we talked about it, it seems like 7 out of 10 companies, when they announce great earnings,
Yeah.
7 of them drop. They don't keep going up.
Because they kind of rise up to the
So
earnings, that's right.
now that we've done this, and we've given resources back to these major companies, is that it then? Now the market will go down
We talked
because.
about last week or so, it was about the XLK, that's the ETF for high tech.
Technology. Yeah.
Kind of tells you, forecasts what the S&P 500 will do. We talked about this. You see the XLK dipping down
XLK.
because
Very thanks.
because your high techs, your semiconductors have risen through the roof. Nvidia, all the money. You made a lot of money this year. So people are taking off that, it's coming down. Is that a predictor of the S&P thing going down in January, February? I want to take a look at that as a mitigation for risk, whether it's telling you that we've come to a top of some sort and plateau there.
I think it makes sense that we have to go down. I mean, just yesterday, on this news about what's happening to Mr. Flynn, the stock market tanked. It was like everybody's nervous. I
Well, it
think
came
when
back
the
up
news
again,
comes
too.
out, It makes sense that when the news comes out, that the new tax laws in effect and so on, there will be some sell-off. I mean, that makes sense. I mean, it may be temporary, maybe a few weeks and then it's gonna go back again, but I would
I
expect.
think the main driver will be the global, called the synchronous global recovery. Europe, China, Japan, they're all synchronously going up. And that's feeding our market as well.
What do you think, Gary?
I think Wei wanted to say something.
Oh, okay. So in my opinion, the overall market will continue to go up just because of inflation. If you look at what usually happens when there's a tax cut, you got to look out for inflation. Because when more money gets into circulation, that means under the fractional lending rule, for every basically $10 you put in bank, the bank keeps $1 and the other nine goes out in circulation and goes right back to the bank and they keep lending. So that just injecting inflation instantaneously in the moment they pass the law. So when you look at the valuation of the company, right, I think the company itself will not generate more value, but the price will reflect that increase in the money in the system. So that's why I think the individual companies, like right now, I would look at some certain valuation, right, price to earnings, and that earning value, the price to earning ratio is going to go higher just because there are more money in circulation. That's what I think.
Yeah, right, but a certain amount of inflation then becomes.
I think another gentleman there wanted to say something too.
Didn't Reagan do something similar to this?
But again,
Didn't he cut taxes?
The Reagan tax cut.
Yeah, what happened?
The economy boomed.
Okay, well, and I was just thinking,
Not for 2 years.
No, and there was that, by the way, Reagan raised taxes 18 times.
He also raised taxes.
18 times.
if
It took 1.9 years.
And not a great deficit.
Reagan was a compromiser. He was always compromising on his side.
but also before Reagan, what did the market do? Was the market flat for many years, or did they have this huge rise?
We had Jimmy Carter.
Yeah.
We were
He
being
was
pressed
down.
with
He was
1%
basically a
interest rates.
stumble bump.
It was pretty flat, and then Reagan made a change.
Yeah.
It's different now.
But
Well, if Wei is correct, though.
Then you should see higher interest rates.
Inflation is the kiss of death. I mean,
That
the
raises
chairmans
interest
have been fearful of this for 15 to 20 years. And they've done everything humanly possible. They're scared to death of inflation because they can't put it back. They can't reverse it once it gets out of the bottle.
Yeah, they just raise interest rates.
Yeah.
But
And just this week, we got the GDP data for, I think like 3.3%, which is above the 3% estimate
Some
from.
predictions are about 3.9.
So I think December rate hike is going to happen.
Quarter.
And short-term rates are already at 1%.
Yeah.
You look at 13-week T-bills are already at 1%. But the long-term rates are still at only 2.8 or 2.9, so
Yeah.
how can both things be true? But they are.
what do you think, Gary?
My opinion, I think it's gonna be bad news for the Republicans and for the country too. Once it passes, gets locked in, we're gonna be trapped in something, and the Democrats are just gonna be determined to reverse that when they get the chance, and that's gonna be chaotic. I mean, like, that's what the markets hate, uncertainty, and we're gonna have it in
So do
spades.
you think then in the short term, the market will look at this favorably, or like that 7 stocks, when good earnings come out, they go down?
Yeah, I would see that it could happen, you have a little bump right after that. They're gonna then realize, hey, wait a minute, we're in for a big storm, like big storm.
If you can no longer write off the mortgage deduction, what's that going to do?
You still can't write off. Well, you can't.
Up to 10,000, that has nothing to do with that.
No, that's different. That's property tax. Property tax, not mortgage deduction. Mortgage deduction for the house is going to be 500K, and for the Senate, it's not touched. Yeah. So I think what's gonna happen is it's going to be whether or not we get the tax bracket under this like gradually called the sunset rule, where I think under the Senate in 5 years, then you're going to get a deduction. The decrease in the total tax you pay for the next 5 years, and then it reverts back to where it is currently at with the like all this different bracket. But for the house, it's like permanent fix. So depending on the compromise, if it's like we get a 5-year sunset rate tax deduction or tax rate decrease, or get a permanent one, that's going to determine I guess how much money gets injected into the system for the foreseeable future.
Just one last thing, in the post the other day, they had something on robotics. By 2030, they predict 30% of the administrative support will go away. That's it.
Okay, Vince, you're next.
Did you say that was based on an actual robot or more like electronic?
But not the robot, it's basically the iPhone and taking away functions, you know, people will be able to self-sustain.
So Vince, you want to pass or?
I haven't bought anything for about a little bit over a month. And I started investing in stocks like 53 years ago, and I've never seen anything like we've been running through in the last few months. The market is just way, way overvalued based on what's the way it's behaved in the past. So I don't know what to do. I'm just sitting and watching.
You're not selling it, going.
Yeah, but I'm an old man too. So, you know, you get to a certain age where you are more interested in preserving what you've got than, you know, than making money. So I'm kind of scared. I've never seen anything like this before. I think we're going to have a pullback sometime. It won't be a big pullback, but it'll be a significant pullback. So that's the attitude I've got right now.
Are you getting out of your positions because of that? Or are you keeping them?
I'm holding mutual funds, and you don't go in and out of those because you lose money doing that. And I'm holding a couple of stocks that are just doing nothing. That's it.
So is that it for you, Vince? Noel, you're next.
All right, ladies and gentlemen,
You're the $10,000 guy.
11,000. Sky's the limit on Bitcoin.
we're going to try to keep away from Bitcoin.
Okay, well, let's take
Out of
that.
respect for the label of the stock, but I can say three things that people don't know about. One of the things that they don't know is I used to be in a personal relationship. Leon Panetta.
Oh, yeah. Good man.
I went to a college called California State University, Monterey Bay. He has a Leon Panetta Institute there. And I went there for 4 years, so between 1999 and 2003, he had a small office, and I would go there as commissioner of clubs, just trying to build different programs for his university. And he had a real small office. He would always sit with us, so it was really nice. And now, of course, you can't even make an appointment.
All right, of course, I mean, that's,
So why do you mention his name?
I mentioned his name because I wanted to say three things you didn't know about me before getting into what I was saying. Just to make things more personal, because I don't want to talk about Bitcoin.
well, Vince, everybody's got
What's your favorite color? Blue. Ah, good color.
He's gonna say 2 truth and 1 false, and then you have to guess.
Yeah. So my stock for the day is a recommendation from, well, I got it from the groups. I think it's from NASA, and this one is Esperon Therapeutic. Ticker is ESPK. ESPR. Sorry.
Yeah, it's ESPR.
yes, PR.
Nasser gave us a recommendation for the stock a while ago, when he was
See,
here.
no yield on it.
He was here in the beginning of January, or I don't know, it was March. And it was one of the first pharmaceutical stocks that I purchased based upon Nasser's recommendation, because even I am under the impression that tech is overpriced, so I'm trying to diversify and go into buy.
What, at 10, so like 60? Wow.
So yeah, this stock is, so the reason why this is a great stock, and I'm recommending this to our group, is because this is a very conservative stock. It doesn't fluctuate. I mean, it fluctuates, but not like most biotechs. It's very stable in that regard. So it's great. It has upward mobility currently. It's a buy no matter when you look at it. It's a buy now. They have solved, their number one product deals with correcting cholesterol, lowering cholesterol in elderly and middle-aged people who have cholesterol issues. So we see cholesterol on the rise with even myself. I have high triglycerides, which is not cholesterol, but it's
And that deals in that
Close,
area.
it's close, yeah.
Yeah.
So, we're noticing it's happening to younger and younger people. This stock is a great stock if you want to fight against cholesterol or you want to make money off it. Either way, it's a great stock. So I've held it for a while, it's really done well. Another stock I want to mention is ALL. I've mentioned this probably off and on with the group. It's Allstate Insurance. I think I mentioned in December that insurance would be something to watch. December of last year, this is written for the record, that insurance would be something to watch. And it being a safe and incremental rise in the stock, this is the one you want to look at. All state has outperformed the other stocks that I had. I think I had Prudential, I got rid of that. But all was something I held on to. It was rough. You can see between October.
Oh, it's got a very small yield, 1.4%.
And so there's been a couple of dips that I've tried to fight, and I've held on to it. Not too much, but just a little bit.
Just to throw another one in there, is SWAT did have a guy on about almost 2 years ago, who's an expert in insurances, and he mentioned KSNL, Kensal, and I picked it up at 20, it's about mid-40s.
KSNL.
Kensal,
Come up.
KN,
Okay.
SL. So, when the fellow, the expert on this, called it an acorn that could grow to a tree. That was the term he used.
Very
So,
poetic.
not to take away from you there, but
No,
maybe
no.
this is, this is another one that's a little less expensive. And that's what this analyst called, that's his sole responsibility is insurance companies. And he brings them in as a guest, like our friend Tim Melvin on banks. So that might be worth it.
So, as I said, I wouldn't mention a particular investment that I've been involved in. Unfortunately, I have to say this. The CME Group has just announced
Bitcoin futures.
The SEC. The SEC has now authorized for preliminary trading of Bitcoin at, and that's one of the reasons why the price went up. And they're just calling it now under the correspondence between the SEC and the CME Group that is labeled now as a derivative. Derivative of sorts is what the Bloomberg expressed.
So futures.
Yeah, it's in order, well, they're bringing to the futures market, but this is a little more than that. So that's one of the reasons why it went from 10 to 11,000 pretty quick. And that's all I have to say.
Mike, you're next.
Well, here's my summation. I have a number of portfolios I manage for very young people. I'm still buying. For myself, I'm just sitting tight. I'm not selling. I'm not buying. And I've got a couple of portfolios I manage for very old people. And I would say I'm defensive. I'm not selling a lot, but I do have some cash. So I'm betting on some kind of a correction, but I'm not really getting out.
So that's it for you?
Yeah, I haven't.
Sam, you're next. Oh, all quiet there. Well then, James, it's up over to you.
Well, I was thinking about my portfolio before I came over here, and I've been allocating about anywhere up to 5% for more riskier plays. So about a month ago, I bought a stock. If I was an option guy, I might follow this one because this swing was like crazy. It's EDIT. I think we talked about it a little while ago. I think I bought it around 25. It's at 29. It's this CRISPR biotech technology. I figured I'd just take a flyer on it. We'll see where it goes, but I figure I can't really lose too much. It's a fairly cheap stock, so I just bought a few shares. But this is going to be one of my riskier plays, just because I don't know much about biotech or anything on how any of this stuff works. But I do see when there's something that they do gene editing, and they own basically the patents behind it. So I figured I'd take a flyer on the stock. I was also looking at what I'm gonna do next year, and
We no yield.
no yield. It's speculative. Mhm. I don't know how long they've been around. I think for a couple of years. There've been some battles about the patents behind this technology, but it's just a speculative play.
I've seen some stuff on CRISPR at like Rockville Science Day and some other science shows, and the gist of it is you can have high school kids playing around with gene splicing.
Oh, it's scary.
It's wow. Yeah. You bet. Check it out. Yeah.
By the way, I guess supposedly there's a report that at least one person has done it himself.
Yeah,
They
so
swapped out a
CRISPR is
gene in
legal,
there.
anybody can get it, so you have high school
Hey,
kids
I
playing with
tell
gene
you,
splicing.
apparently you can do it.
So
Yes.
What is gene splicing? I mean,
Like with DNA and all, yeah.
Now, this particular stock will swing 5-10% a day. So it's, you know, you just have to be careful when you buy it and understand that there's big swings,
Speculative.
right? Speculative. Which brings me to, I just want to touch, because I haven't heard it since I came in, about some of the chip manufacturers. So I know this last week wasn't a good week for chip manufacturers. And I'm actually hoping they fall a little bit as I get ready for my next year's portfolio. I'd love to buy a little Texas Instruments, a little Taiwan Semiconductors. I get a little bit nervous about Micron and some of these others that, to me, it's almost more like a commodity play, like these larger, bigger players have a more diversified portfolio. And I think John keeps recommending one, and I know there's Orbitech in the room, but if anybody knows of a smaller chip maker that's coming out with a newer technology, let me know and I'll take a peek at it.
Keeping auto bodies big guys.
Yeah.
Usually come out.
But
There was a guy that was here, I don't think you might want to look into, look at that.
I look, that one's wild too. I looked at it. And I look at these, I consider these to be the biotechnology of the tech sector because there's just wild swings, but a lot of it is based on demand and competition. So that's why I get a little bit nervous about Micron and some of the other ones. But like I understand the love affair with Nvidia and some of the other chip makers, but I just don't understand it enough. I don't understand the technology. But I'm interested in adding some of this to my portfolio. Probably would go with Intel as well. I know there's a, who's the A, is you that does the, has a position with other
AMD.
AMD, yeah.
So is that it for you, James?
That's it for me.
By the way, I sort of skipped Hector. You
You
want?
can go around.
Okay, so all right, we'll go to you, James, then.
Okay, speaking of NVIDIA, I bought NVIDIA this week on the dip. I've been waiting to buy them for a while, buy a bigger chunk. So they dropped below 200, I bought right at 200. I think they're gonna continue to at least hold their value for a while and go up long term, so it'll be a longer term play. Yeah, I still
That's a
trying to,
little yield, I guess.
yeah. And I think they're the strongest player amongst the big guys, with artificial intelligence, self-driving cars. So that was the only movement I've done this week.
Jack, can I ask you a question about NVIDIA? Do you think that perhaps we're moving away from the classical chips and more to graphic cards because of this whole algorithms and changes in that? Because
Yeah, I think it's a shift towards the GUI, the graphic processors, for a couple reasons, and also it's complemented so much by the augmented reality things that's happening, and so much of the self-driving cars is visually oriented and has to process them. That's my gut feel.
Well, what is the, Waymo?
Yeah, it's a partnership with mostly Google. So they would use chips like NVIDIA. Windows does that. Windows does, I guess, the producer of the software. That's it for me.
All right, next gentleman there, I forgot your name, sorry. Yes.
No, I got you.
All right, you're quiet, okay. Let's see, where were we?
Nothing.
Oh, Dan, all right.
Oh,
nothing for you.
incidentally, I am, I don't know if this is the right place, I'm just asking when I do it though, bonds, right? 'Cause I'm trying to work out some I have some bonds as a kind of a risk buffer in my portfolio. Not sure what to do about them. So anybody has any suggestions, maybe offline, talking towards, that's
Bond.
Bond.
Interest rate go,
What kind of bonds do you have?
bonds. Yeah, so I have some munis, short term, intermediate, things like that. So, I try to have a ladder, but they're not doing well, and I don't know if they have a future.
But you bought it for safety, right?
Yes.
For your
Yeah.
protect principal and get income. Yeah.
Right. Well, the principal's dwindling,
Mhm.
and it might dwindle some more.
Yeah. In general, I stay away from bonds just because you're barely keeping up with inflation, and with at the current state, you don't really know what the inflation rate really is, just based off the data that they give out, like every single week. Oh yeah, we have inflation less than 2%. I'm saying, what the hell? How do you compile the data, right? If you look at it, like, exclude a lot of the stuff that's not considered, inflation. So even though you're buying bonds, you're thinking you're making money, but you might be losing wealth.
Will that change with interest rates going up?
Yeah, it will
if
definitely.
rates go up, bonds will go down.
Yeah.
The bond,
Yeah,
The
bond
current
price,
current
but
bonds.
you're
Yeah.
buying a higher coupon though. That's the honest.
With your new money.
Yeah, with your new money,
Right.
so the current ones.
Right.
So that's why I generally, at least currently, I stay away from it. And plus, I'm not too familiar with the bonds. It's easier to analyze a company compared to analyzing a bond.
Anybody here a preferred stock ETF? Yeah.
Right.
I've got some.
Right, so this gives you a juicy, Gary loves this, Gary. Look at that, 5.78%. And.
Not for me there, Hector, but you and I.
5.78,
Yes, I recall it.
and that's a monthly paycheck, monthly paycheck for you. And look at the volatility, not much volatility over 5 years, well, there is some volatility.
But if rates go up, those are gonna get hit too.
Yeah.
Mhm.
Yeah. Yeah, okay.
So is that it then for you, Dan?
That's it, thank you.
By the way, I want to go to the lady in our midst, which I'm just so great. Thanks for coming. 'Cause
I never have women here, huh?
yeah, so thanks for coming. And you want to say anything now? You sure, whatever you just want to pass, whatever.
Well, my name is Ana Lugaro. I'm just here to just learn as much as possible.
Right.
I've already taken notes.
I mean, we only know what we think. We don't have the answer. We just have what we think.
Well, you know more than I do. So.
Also, if you have any, trend that you've noticed or any, investment that you might be interested, you can just share with the group, and then other people might actually know certain companies that's in that industry, and then can give you the ticker symbol or something. So
Okay.
that's another way to contribute early
So
on.
I'm pretty much building my portfolio to supplement my retirement.
All right. So is that it then for you?
That's it.
Then the gentleman next to you.
So I'm new. What are we doing?
Oh, I can say. Usually we go around the room and
Yeah,
talk
that's
about what you did this week or what you are thinking of
We
doing
want,
and the trend that you're noticing.
recommendation that will make us rich by Friday.
Yes.
No, we want to know what you think. That's what we want. Your recommendation, you might be trying to fool us. We don't know, but we want to know, is that what you think? That's what we want to know. What do you think?
Okay. Well, a bit about me. I am taking a year to convince myself if I want to invest. So I'm just learning as much as possible. I don't have anything. I have $7 in Betterment.com right now, and the only reason I haven't taken it out is because it's so hard. So, well, I do have one thing. So, I think I heard earlier that there's a question about GPUs. If GPUs will overtake CPUs. I don't. So a bit about me. I'm a developer, and I also do a lot of deep learning and machine learning. So, I think that GPUs, they're going to expand. There are a lot of uses, both in any kind of high performance computing, any kind of mathematical computing, or certain types of mathematical computing. They're going to be really big. They're already big for gaming. I don't think they're going to be big for cryptocoin mining. So, yeah. So, and I also think there are lots of other processor types that are out there. Whether this translates to actual companies, I have no idea.
Just for point of reference, they're using Python to speed the GPU processing.
The what?
They're using Python.
Language.
Oh, the Python language?
I found that out when I was sitting with the developer in line for my new iPhone 10.
Mm.
He's actually using Python through GPUs to do multiple. He's not just mining Bitcoin, but the GPU he's able to mine multiple coins all through the GPU.
Okay, that makes a lot of sense.
Yeah. So,
Yeah.
And he uses Python programs.
So is that it for you?
Yeah, yeah.
Wei, you're next.
All right, so this week of course we had a huge correction in a lot of the technology stocks, and so one of course that we're always interested is Orbotech, thanks to Josh. So based off my valuation, my price target for Orbotech was 48.22 on the lower end and 49.4 on the upper end. So now it's this is basically like 1 year of their earnings, about $12 per $1 of their earnings. So most of the technology companies right now we're looking at $15 per every $1 of earnings. So at 49, it's actually a good price. So I actually added more position by selling put options at the strike of 55. So it's in the money. Yeah, at 55. Just because if I project it out further, that's basically.
What day do you put option?
I don't remember, but it was like
December, January?
it was before the next earnings, I believe. So it has to be around like January.
Very
something.
likely you
Yeah.
put on that.
Yeah, I would likely get the
how much
shares.
premium.
I will get the shares, unless it goes above 55 by then. But
In which case you just keep the premium, you're good.
yeah, and I own the shares, which I'm okay with it. So that's one of it. And then I want to add on to what we talk about, the GPU. It's that what's interesting, most of the machine learning stuff is being done in TensorFlow, right? So that stuff, I think it's going to be here for the training aspect of it. But then once the application is deployed, they're likely going to use like lower end of the GPU. So most of the heavy lifting, it's done on the training side. So early on right now, we might see big ramp on like higher and bigger cells on the more capable GPUs. But towards the end, you might have like lower capacity or like performance GPU being used to mass deploy. And when that comes, we're gonna have a lot more GPU cells, but on the lower end of the market. So something else that I want you guys to look at Xilinx. It's the FPGA boards. So I believe we looked at this like early on this year. That's Xilinx. So of course they are generally being used for a lot of the front end like fast processing. So I think there's good synergy using GPUs and even using Xilinx FPGAs to do some of the cryptos and other processing applications. So I've been buying like Xilinx when it was like, I forget, like maybe
Are
40
you buying these as
something.
a trade or is it buy and hold?
For a lot of people, I think it will be trade just because I'm doing options.
Okay.
So most of the option comes to the day and I have
So
to take.
you're looking for
Yeah.
fast money.
Yeah,
It's
but
just
but I
what
do
you use
I do
it.
end
That's
up
what I
owning it. So that's why if you I think I shared with the group last week about my website that I put it up there, my overall
I can put another
positions.
plug up for you. What do you?
Yeah,
what's
it's
your website?
WEISHUOLHUANG.com. Yep, that's it. And
All
then
right.
in there I
And
put
it's a free plug. Why not?
I put the book tab there to recommend investment books for people, the new investors. So someone like you might be interested in looking that up. And then there's another tab with my performance up there with my realized gain, which is about 88% this year. And then underneath, I put the pie chart of all the positions that I took or capitalized off. And then, of course, that's this unrealized position as well. And I don't disclose my unrealized positions there. So right now, of course, I look at the FPGA round, which is Xilinx and also Intel, because they purchased Altera. And my Intel valuation, the last time I did it was like probably in spring, and my price target for it was like $38. I posted in Facebook or something, I don't remember. But But yeah, but of course, right, it blew past to like 44, so I'm not buying that anymore. So I'm not buying that one anymore. So I can pull that up. Okay, right here. At that time, my price target for Intel was like 42.5 to 45.12. That was posted July 4th in Facebook, and yeah, and my Orbotech was ranged from 32.52 to 56.81. That was like, 3-year projection, but that was way off now considering we got more data. But so I'm looking at mostly semiconductor segment just because I have competence in it, and that's why I work on. And I basically came to a conclusion that instead of jumping around in different markets, just focus on what I know. And since I can do both the upside and the downside, if I know the valuation, I can stick with selling puts or even capping my gain, knowing that if it goes above that, I'm okay with selling it at that price because it's going to be overvalued based on my valuation. So that's my current investment approach: is evaluate and then use options.
Here's the ETF for all major semiconductors, and you see that ramp up extraordinary appreciation on a 1-year chart. We expect, even on a Fibonacci, if you look at it from here to here, you expect a 50% retracement maybe to there to 90. Do you think that'll eventuate in the next semester, like 6 months, go down maybe to that particular one from 99 to 80 maybe?
Yeah, I mean.
But you're willing to weather that.
Yeah,
at this point, you still think it's somewhat of a part.
For me, that's a good indication that it's the semiconductor sector is in trend, right? You got that big momentum building up, so it's good to invest in that business. But it goes right back down to the individual companies that you want to buy, right? So for me, the looking at the ETF or the indicators or index, it tells me that okay, this is a good industry to be in to go long because the trend is there. But then it goes right back to what company I'm interested in buying, and then I have to do the evaluation, give my own price target and a lower bound, upper bound. So looking at that, it just gives me a warm fuzz that okay, it's a growing business. That's it, and it doesn't tell me whether or not the company that I choose is going to perform well or not, right? So that goes right back to how I will be able to evaluate the company.
So what do you think about Micros?
Micron? Micros. Which?
What's the symbol for that?
I'm not familiar with that one.
They're competitors for FPGA.
Not familiar with that one. I've only used Altera and also Xilinx. Yeah, they're the two main ones.
Because I know that Micros FPGAs are all RAM based. Am I correct?
No, I'm not familiar with Micros.
No, Xilinx. But Micros, because I was doing a project with FPGAs myself.
Okay.
And it just seems weird that you always need RAM with the FPGA, but Micros sells flash-based FPGAs. But it seems like they're the only company that has them.
Well, FPGA chip on its own, it's just logic gate switches, and it does have certain internal RAM or something, so it can offload some of its processing or finished data there. I don't know, to quick retrieval from the next GPU or CPU or whatever processing.
To load your gates, your functions, whatever, you need an external RAM on all Xilinx FPGAs. But for Micros, there's flash built in. So you turn it on and it starts running.
I think most of them have them already built in.
That so we can look at it or
no, I don't understand what it's called.
How do you spell it?
MICROS.
It's a publicly traded? MI.
Yeah, there is.
It's a private? Okay.
Private, so you can't buy it.
Yeah, that would.
Alright,
Incoterm, that's probably it, huh?
alright, so we can't buy it. Okay.
Yeah, okay, but that's private, yeah, whatever it is, yeah.
Yeah.
Thumbs up.
Okay, is that it for anyway?
Yep. Yeah, of course, and I also own AMD now. I actually added a few more positions, small portion of it, this week. Yeah.
A bit of courage.
Yep.
Okay, is that it for you?
Yep, that's it.
Yeah, next gentleman there.
About what you do with part of that website. You've got a website, you have some positions that you post on there, but you don't actually post any trades.
No.
So is that based on a portfolio that is backed with money? Or is it, in other words,
Back with money, yes.
it's back with
Yep,
money?
yep.
But it's your own money, it's not.
My own
other
money.
people.
Yeah, it's my own money.
But some people might wanna go on your website and see if they can somehow follow it.
Yeah.
Is it possible to see your trades elsewhere, by any other arrangements?
I can show it to you on my phone if you want to see it, but I don't plan to post it online.
Well, sometime back, I went to the Orlando Money Show a year ago, this month, in February, and there was a buy right. You know what buy right is? Buy right is.
You buy buy stocks and write a call, right?
It's usually kind of conservative and it doesn't.
Yeah.
maybe not do
Not
so
the
great,
right
but he
thing.
was trying to get 5% for every buy right and more. But what I was saying is he posted all his trades. He sent them to me in email for a whole year.
Yeah.
So,
Did you make money?
yeah, whatever. Well,
Did he make money?
I don't like it when he buys it. When it's
That's
run
more
up.
important.
When it's run up, it's run up, you look at the graph, it's run up, I don't wanna buy anything like that. But some of his recommendations are already, like 3/4 of them have already run up.
Yeah.
You know, the ones that are still moving flat on a graph, those looking very interesting.
Yeah, I mean, just looking at my trades is not really going to benefit you much, but I honestly think it's more the educational component that's more important. That's all.
Yeah.
So, I mean, we can talk more about how to analyze a company, and then you can do your own trade decisions in buying options, buying stock, or do
We
whatever.
will be happy to manage your money for 10%.
No, I don't do that. It's too much.
Okay, is that it for you then, Wayne? Yeah.
Yep.
Yeah. Wherever you,
Hi, I'm Tom. This is my
Tom?
first day here.
okay.
You've probably spoken about the tax all the time, so that was my year. I'm a government employee, so most of my funds are locked in the government fund, the TSP.
Oh,
But
by the way, that's a great setup for them.
Yeah.
I mean, they just really are it's the best. Too bad the public can't get in.
Yeah.
The government setup is fantastic.
So, but on the side, I can't stay out of the market. This year, I've been in the automated cars and semiconductors. It was a great year. I have Lam Research, Applied Materials, Micron, Nvidia. I had Mobileye before it was bought out. So I hit all the right ones. It wasn't hard to get in that area. The PE ratios with the I stay conscious to that, and I try to stay low on them. Nvidia was an exception to that, but Lam Research, Applied Materials, and Micron, they all have pretty good valuations. For supply, I thought that before this week, I thought that I had to think about that next quarter, that it would be something, the second half of 2018. We had that one report on Monday, and then, then it started, the fear started going, and I thought Micron was going to skip on that because of its DRAM supply, and then it wouldn't hit DRAM, and then Micron is shifting into 3D NAND from NAND, and the downplay on NAND supply makes sense because if the companies are shifting into 3D NAND, then that makes sense. So I thought I had more time, but bam, man, it's like 20%, 15 to 20% this week on the portfolio I had. I'm not worried about it because I think it's part of the pullback.
It's healthy.
Yeah. I mean, the S&P is trading, I think, at 18 times now, and that doesn't seem to be too high. So maybe the big buildup isn't so much the anticipated tax, but maybe it was suppressed beforehand. That's just another thing to think about. I'm sure it's probably both or something, But the PE ratios, I tend to follow that. I've stayed away from some of the higher ones. Albemarle is another one, the lithium industry. I'm sure you guys have talked about that. ALB.
What is a good PE ratio to get at?
Well, I think you have, it's the standard thing to say, tell the standard education about it. It's just, monitor it with your peers, what the peers are trading at and what that industry is trading at. That one's high actually. FMC is one of the peers. They talk about
cut gap down on AFDs.
Yeah,
What is it, FMC?
FMC. That's, both of these are up 70 or 80% this year. And the demand for, that's higher. The demand for lithium, though, I mean, I'm not really a short term. I like monitoring for short term, but in my mind is thinking, well, what's going to be happening in the next 2 years, 4 years, 5 years? I mean, China might put in a cap on the amount of gas, or a minimum or a quota on the amount of cars that are electronically operated, and the European Union is going to be doing the same thing. So, you know, you think about this, where, you know, 10 years, 20 years, I don't think like that for investments, but as that industry is going, the lithium is just going to
Why
be
would
the
Europe
demand.
or China put a cap on electric cars?
Their emissions, I'm sorry, they're not a cap on the quota on how many they need to have. Cars need to be making 10% of electrical cars, so it's not the cap on them, it's the cap for them.
Will they
Quota.
increase or decrease that? Increase that.
They're going to be increasing that more and more.
So that's like the minimum they need
Yeah,
to
it's not
produce.
a cap.
understand,
Yeah.
So it's a bullish case for lithium.
Yep.
It is, and there's other lithium. I was reading Kramer the other day, and lithium is the big play. But some of these batteries, they need. So a laptop like this might need an ounce of lithium, but a car needs like 100 pounds of lithium. One of the electric cars, and they need some other chemicals like maybe manganese and copper and nickel. But one of the things that Kramer was talking about the other day was these coatings that these batteries need to have. All of these batteries need to have a lot of coating to prevent fires, and he was recommending PPG as a company that makes the coatings. And it's not nobody has gotten there yet, so it might be something that it's going to follow the lithium, but they haven't gotten there yet. So that's something that I'm going to be looking at. But I don't mind, the 15% hit this week. I'm hoping that it comes back. I heard that some of the prior corrections were made up in 3 or 4 trading days, like, some of the earlier corrections in 2016 and 2017. I don't think that's going to happen with my 4 tech stocks, but that's okay, because they aren't that high in their valuation, and the semiconductors. I don't know too much about the demand for 3D NAND, but I'm hoping that all of the whole data transformation will go into that, just like it did for DRAM and NAND, so that all of these companies are going. One thing that Micron is the smaller of 3, and they said, I was reading if there was a price war between Samsung and I don't know how to pronounce the second one. The second major one, Micron is the third one, so they could lose out on the price war. But so that's where I'm at.
Okay, that's it for you.
Yeah.
Paul, you're next.
I came in late, I was wondering, did you discuss the reduction of corporate tax rates already?
Yeah, we talked about that a little bit. What we still going to the House of Representatives, and we're gonna probably sell in the news is probably.
But if you have a reduction in the corporate tax rates, that's an automatic boost to the earnings of some companies, many companies. So in general, you'll have a reduction of PEs just based on that tax law in the upcoming year when it's effective. The PE will go down, the earnings will go up a little bit, which is bullish for the market.
Yeah, especially for the Russell 2000, the smaller companies.
But do you think
But
that
it's been priced in already?
Yeah, exactly my point. It's
Already
already
priced in, huh?
The expectation's been building for the last year.
Yeah, it was way back a year ago, right?
So if you look at the IWM real quick, you see this ramp up from late August, people didn't think this was going to make it in terms of a tax plan. Look at that ramp up in just a month from August to September. And expectations that the bill was going to make it. And that's pricing in a lot of it. So that's what I
So is that it for you, Paul?
I don't have much else to do.
I had
You're up.
Yeah, Noel hadn't taken up. I had a stock here that I have a small position in. And I had sold a put at 40. Sold some puts at 40. It's still above 40. OSTK overstock. You might have heard it. And a lot of this ramp up had to be associated with Bitcoin. So overstock, they sell stuff that is overstocked, right? But they did announce like Square that they would accept Bitcoin. And on that news, it started to ramp up and people rode the Bitcoin wagon until Bitcoin went down 18% a couple of days ago, and then they looked more into overstock. Said, well, they're really not making that much revenue off of the fact that they are accepting Bitcoin. So why is the stock going up on Bitcoin? You know, so they got harder to look at it, and they're looking at, well, it hasn't really made a profit all that much recently. That's why hold further on the line they might, but if anybody had any comments on it. I'm going to hold on to my put here. I should have got out when it was up to 60.
By the way, I have heard something that you may not have heard about overstock, is that they're apparently going to keep half of the Bitcoin sales in their pocket.
Oh, okay. There you
So
go.
they're keeping half, and otherwise they convert dollars right away.
So when did you sell your put? Before the drop or?
Sold the puts, I believe it was around this, around here. Around here actually, then it went up to 60. And
then your put would have been close to worthless. It could have been worthless.
December 15th.
I'm sure you might want to set it out.
Right.
2 weeks.
It's amazing the drop in the last month. Look at this. Look at this.
That's another like 5% drop, right? So to reach your 40.
Right, and yeah, we use hope as a strategy, and maybe we'll see about 40, right? Couple other names, just to, the themes. So I subscribe to the Schaefer Investment Research, and they give you some statistics. And in this particular, there are two stocks that have a 100% record of uptrend in December of each year for the last 10 years. Think of that. And so if you purchase this at the beginning of December and hold it through the end of December, you're going to make money. So when you make it, you can sell a put and enjoy yourself.
Each December for the last X years, these
Yeah,
stocks have gone
it showed 100% positive movement.
Now, I can say VTR I have as a long-term hold.
Uh-huh.
And I mean, I like it just because if you look at it, you get a dividend, they've got a track record of dividend increases. And to me, it's like, no, I'm not going to flip it every year. I'm just going to buy and hold it forever.
Yeah.
Buy and hold it until I use it.
It's
for
a little volatile over
retirement.
the year, right? I mean,
Yeah, but so if you look at the trend of it, every year you're going to get a bigger and bigger dividend. You're going to keep getting raises on it every year. It ain't sexy, but it keeps spitting out dividends and you get raises every year. So
Very
what's
nice.
not to like?
1.78. Thank you.
How are they generating the money?
It's a REIT.
Oh, okay, it's a REIT. Okay.
How susceptible are they to rising rates?
What's that?
How susceptible are they to rising interest rates?
I mean, all the REITs are gonna get, they're all gonna be negatively impacted by if there's a sudden rise in rates, just because they're.
That's a key set, because it's going to be quarter point increases. The other one is CB, or Chubb is real estate development, right? Chubb is into real estate development, I believe. I say I believe, I haven't looked, I didn't look at the statistic 100%, that's all I care about. And I'll play it for December, see what happens. But that's another one, 100% ramp up in price during December. If you want to just have a certain rate.
Chop okay, CB.
The other, this does have a 1.8% yield. There's no name, I'm not sure if you heard of this one. But Financial Business Machines. Talking about Mr. Kramer, he said, looks like it's bottoming out, even though Buffett is selling here and there. Looks like we have a bond that's going to have some big sales in mainframes. Wow. Well, back to the 1970s. But how much worse can this get, right? And it looks like it's turning around a little bit. There's some relationships in the cloud that they're fomenting. You got a juicy for Gary, 3.88% yield right there. So I'm not sure you can do much worse than this. You could do it. The other ones that I have,
So are you selling puts in then? Is that
that's what usually the way I do
okay?
it. But I'm liking your idea about buying a long-term call
Calls.
with it.
Okay.
I've done that with several other companies, too many to mention here. PTX is something that came up recently. It's a good play. Technologies, good long-term. We started looking up for that. And so that's about it. The Bitcoin theme with OSDK with Square, interesting. One more I would say is AGN that Mr. Kramer put out is, it's been a dog actually, but it looks like it might be, even though it went down 2.2% on Friday. It has a nasty looking chart. Allergan, very well known pharmaceutical company. It does have a potential of some upside here. Let's take a look at a 5-year. And if you can see a December, let's see, this obviously for December, this is in December, yeah. That doesn't bode well there, but the thought is that there would be a bottoming out here if you want to take a chance on this one.
Just that
Yeah.
yield, 1%, you know?
I can't give you any hard fundamental reason here, except that if you want to go member of the Church of Kramer, you might say, well, he has it in his portfolio, that's what that would do. His chartist and his Fibonacci guy say this has an opportunity to go up, as opposed to Square, which is really going up, and we'll see 37, 36 before it sees 42 again on Square, you know. He was comparing the two. And so I think.
I'll throw an idea out for you. Look at my nephew's an engineer for LMT, and they make weapons.
Oh, yeah.
So whenever North Korea starts raising hell, I mean, take a look at the chart for them. The point is this: war isn't going away, and if you have folks that make this stuff that's used in war, it's something to think about.
Yeah, and plus, they are in every state of the union, so congressmen are always pushing for LMT.
There's a little bit of a dividend deal on it, LMT.
Like going as well.
Okay, is that it for you, Adrian?
Yeah, that's what thank you for
Can you put in one more HEICO? You're an aerospace company, defense related, and it's been moving well.
How do you spell that?
Very good.
How do you spell it?
HEI.
HEI.
HEICO.
EI.
HEI.
So it's okay, now do you had a question over there, gentlemen?
I had a question for the answer. I was trying to understand that you bought some puts on the,
Sold.
sold the puts on it,
Let's say an IBM, for instance.
and 42 or something.
Well,
No,
let's
the
take
first one.
this, for instance, is an example where depends how cautious you want to be, and whether you want to own the stock eventually. If you really think owning the stock is good, you would sell, as Wei would say, sell a 155 put, and if it goes below 155, it will put you in.
My question was that, is that the one, if it doesn't go your way, you have to surrender the stocks?
So the stock will be put to you. That means you have to accept the stock
You
and
gotta
pay
put
for
up
that
the
stock.
cash.
You have to
You
buy
have to
it.
pay for it, that's the
You gotta pay for it.
However, you will pay much less, or less than that price because you have already collected a premium for having sold a put. So let's say you sold a put for $200, it comes down to 153. okay, and you're put at the 155 strike, you essentially come out even. You know, something we can talk about offline because it's a lot of math, but it's a way to get a discount, if you will.
Yeah, my question was, at what point do you have to surrender the stock, or you have to pay for the stocks, the other guy?
There's a fixed expiration date, but when you buy it, there's a fixed date that it's,
So if it doesn't go your way, then
It
that's
could be
when
7 days, it could be 30 days.
And it can be put to you at any point,
That's right.
Doesn't have,
So you have to,
be ready to pay.
You have to have the money or a credit line handy, if this can happen anytime.
Yeah, margin call.
That's right, yeah.
Okay, well,
Away
then-
from that. You're gonna get burned.
Yeah, Schaefer's Investment Research, we're put on the board there, SCH, so we can put in here, SCH.
What's SCH?
Yeah, I have a lifetime subscription there, I don't like to pay monthly rate. You know, there it is, there you go.
Or is this one, I guess, one
I have a
average?
newsletter that it's worth looking at, I think for free.
Do they give you individual company analysis?
So there's pretty strictly on options house, so they'll make our options recommendations.
Oh, okay.
They'll give you a background on why an option fits with the company,
Okay, the story.
the company's actions at that time. For that particular kind of advice or analysis, I would recommend this one. This is not too bad. Thanks, I also have a lifetime on this one.
is that give you CMOS too?
No, this is more traditional stock recommendations. And so they have screens. So this is branch number 1. So you can see I signed in. Welcome, Hector. So this is what they've put in. They added on the 2nd of December. They added these issues as their number 1 ranks.
How many stocks they have in the number 1 rank?
221?
Yeah, right there. Very good. 221 right there.
Gary, can you add to the board, and think, it's coming out in early 2018, Robinhood is adding a
Options.
web interface. So it's been app only until now. You can get on a wait list to be on the web version. This is free trading.
Oh.
Is that Robinhood.com then?
Robinhood.com, yeah. If you go to that, you can do some more research, but they make money on the uninvested cash you leave on hand. But I've been using them on the app for a year or so. It's great. I don't do a large volume on them, but the fact that it's now web-based will open it to a broader audience.
All right, I guess that was it for you, Hector,
Oh,
right?
yes, thanks.
And we're opening it up to everybody. We got a few more minutes left, so.
I've got a quick comment. I use Scott Trade, they're getting bought up by TD. One of the things I worry about is coming to fruition, and that is a brain drain. I had a manager at the local Duke Street branch, really smart guy, he'd been there for a number of years, he's gone. So just kind of keep that in mind, that if you've been using somebody, they're getting bought out, you tend to have talent leaving, and that's, to me, I'm like, oh crap, this is what I see happening at Scott Trade.
Did you use Ken, the person?
Yeah, I mean, he did a lot of smart stuff for me, just as far as administratively, he handled a lot of things for me dealing with, you know, realtors and inquiries and different things like that. He was a very smart guy.
Where's he going?
He took a job with Capital One in compliance. But Scott Trade never let me know. It's like I walked in, hey, where's that? Oh yeah. You know, oh yeah, he's gone.
They don't want you to follow.
Yeah.
Yeah. Right, because this guy was smart and he gave me great service, and now he's not here anymore.
Yeah, and they're not gonna tell you where he went either. And he's
Google
not
his
allowed
name,
to tell
you
you
may
where
come
he's
up in
gonna
his
go.
LinkedIn account.
Yeah.
You-
Yeah, no, I mean,
He's not allowed to tell you that he's gonna quit and go to so and
is there,
so.
oh,
Yeah, there's agreement
He's not
with
allowed to
the
do
broker.
that, and they're not gonna tell you either.
they're telling you.
That's the way they operate, they all that way.
Generally, it's like a year or 2 agreement they sign. After you leave, you're not allowed to take all our customers with you. So there's agreement they sign.
Yeah, because
I'm sure if you talk to me, he'll tell you.
The talent is
It's a brutal
leaving.
business.
You got somebody by so that they don't leave.
It's a brutal business.
I mean,
So let the buyer beware.
Right. So, I mean, as I said, still more, we just maybe got a couple minutes left. Anybody want to say anything?
Yeah, Tom.
Tom, you were talking about lithium.
Yep.
Are there like adequate reserves? Because I just actually, when I saw a YouTube video on this channel, that they made they found a huge lithium deposit in like Peru and Bolivia.
I haven't heard of Peru and Bolivia, but I know Australia is the biggest, I think, and then South America and Chile and Argentina. I don't know. Yeah. They've got big companies down there. The companies that I'm in, Albemarle, it's trying to give its finger in everything. It's got an Australian thing, and it's got a Chile thing. It's trying to expand its capacity. Albemarle.
AOE,
Yeah.
I think is ticker.
The competition's there with FMC and I can't pronounce that. SQM is another one. So, I mean, I don't know. I don't feel comfortable in my picking Albemarle over FMC. I heard FMC is going to separate
by 50-50, by 100 to this, 100 to that.
Yeah.
Split your money by both.
One thing is these are bigger chemical companies. They're in all these other things. But I heard that FMC is going to split its lithium company, so that whatever they split, it would be just pure lithium, not the rest of the chemical stuff. So maybe there's a play there too.
All right, by the way, I'm gonna.
And this concludes this week's live stream. Thank you for listening.